Hello and welcome to Vox Markets. I'm John Hewman and I'm pleased to be joined by Craig Martin of Dynam Capital, manager of Vietnam Holdings. How are you doing, Craig?
I'm very good, thanks, Sean.
Excellent, good to have you on again. 2023 was a very good year for Vietnam Holdings, and we've just seen that that's continued into the first month of 2024. We'll come on to that. Let's start by looking back over 2023. Talk us through the performance of the Vietnamese market and particularly the trust and what's driven it. I know that your performance was significantly ahead of your peer group, and the shares are now trading at a much narrower discount.
Well, look, I think you've nailed the key points. Last year was an excellent year for Vietnam Holding. Actually, at the end of the year, we were given two awards. We got a Citywire Award, a UK Investor Magazine Award for Best Single Country Emerging Market Fund. So we're very pleased with that. And that kind of looks back over 3-4 years of outperformance. So last year we outperformed. We were up about 22%, versus the market was up about 15%. And we also outperformed our peers. And on a 1, 3, 5, and a 10-year basis, actually, we've been outperforming the market. So we're very pleased with that in terms of the absolute increase in the net asset value, the value of our portfolio over time. You mentioned the discount to NAV. So the fund Vietnam Holding is listed on the main segment of the London Stock Exchange. And as with most investment trusts, trades at a discount to its net asset value. We're very pleased that during the course of the year, our discount was the narrowest of the 3 London-listed investment funds focused on Vietnam. And I think by the end of the year, it was kind of single digit, around about 7-8% discount. So that's also important. Shareholders look at what the share price does as well as the net asset value. And I think that discount has been under control for a couple of points. One, the board, in conjunction with us, the manager, we try and communicate about the fund. The board also does share buybacks from time to time. And then at the end of the year, we had our 5 annually continuation vote. And we got 99.9% shareholder approval for the continuation for the next 5 years, which is great. And we're very thankful for that. And then also shareholders, again, unanimously approved a very unique and novel redemption feature, which gives an annual redemption opportunity. And I think that also helped narrow the discount. So we were strong outperformance in terms of our net asset value over 1, 3, 5, 10 years. Also, the lowest discount of the 3 London-listed funds. And then in addition to that, we're very pleased. We got a report back from the Principles for Responsible Investing. And the fund scored top scores in terms of our transparency and our commitment to be a good responsible investor, something we've been doing since 2009. So a good year all in, obviously a challenging year globally. And Vietnam was not without challenges. And I think what helped us was that we're very nimble in our decision making. And we navigated with a fair wind. We navigated a few of the opportunities, and we managed to avoid some of the pitfalls in Vietnam. So last year, good year, and we're very excited about this year. We think the market's still cheap, good growth, and our portfolio is in good shape. Some great names, and we can touch on some of the interesting developments in the portfolio that we see for the year ahead.
Yeah, absolutely. Let's do that. Let's start though with the Vietnamese economy itself. And as you referred to in your recent monthly update, it's been a strong start. You sent me a great chart from the Economist, Wham, Bam, Vietnam, which was talking specifically about the strength of foreign direct investment coming into the country, but we're looking at a reduced, a much, huge record trade surplus as well. I saw a very interesting piece of news about a German business delegation visiting Vietnam to sort of further strengthen ties there. Tell us about the economy and what's going on, and what's really driving the continuous growth of the Vietnamese economy.
Well, certainly Wham, Bam, Vietnam. It was the Economist's choice, not mine in terms of that table. But it was very interesting. Over the last 30 years, Vietnam's attracted a lot of foreign direct investment. So that's foreign manufacturers looking to invest to create factories and businesses in Vietnam for export, largely, to export markets. So Vietnam's a very open economy, lots of free trade agreements globally, manufactures a lot of things globally in Vietnam. So that foreign direct investment, which is enabling that, reached a record level last year, $28 billion. And as that Economist chart showed, on average, it's about 5% of GDP. And that's the highest in Asia. So higher than Thailand, higher than other parts of Southeast Asia. So that has really been bringing a great source of foreign capital into the country over 30 years as the economy modernizes and industrializes. That's been a massive driver. And then linked into that, because that's foreign direct investment to really support made in Vietnam, things that are made in Vietnam. And so that is also reflected in the exports. Now, last year, the beginning part of the year, exports were a bit soft because global demand was weak. But towards the end of the year, and particularly in the fourth quarter, we saw exports pick up. And the trade surplus, the difference between the exports and the imports, was also a record last year, about $23 billion. So that adds another leg to Vietnam's story. And then also coupled into that, to help support the economy domestically, the government itself has dispersed record levels of public investment. So that's public investment, Vietnamese people's money, going in to build roads, ports, airports, that kind of thing. And that has a great multiplier effect on the domestic economy. So these things contribute to the growth of the economy in Vietnam, which also, if you look over, say, 30 years, has been growing at around about 6.5%. Now, last year was a little bit under that, but this year we reckon it will be back on track, 6 to 6.5% GDP growth. And that lifts the wealth of the people and lifts the status of the country as an emerging economy. The cities get bigger, they modernize. So it's a very dynamic path that Vietnam's on. So record levels of foreign direct investment, record trade surplus, and we think this year back on track in terms of that multi-decade 6.5% GDP growth. So certainly an economy to watch out for, and also a changing economy, a digitalizing economy, one of the highest growth rates of e-commerce. And one of our banks, they've got something like, I don't know, 25 million subscribers in Vietnam to their digital banking account. So that's growing rapidly as well. So we're seeing that trend come through, trying to find good opportunities to play off that as well.
Yeah, I mean, I mentioned this German trade delegation that came to Vietnam, that visited the country not too long ago. One of the things that really struck me about that was, one, how Germany is shifting or looking to de-risk its exposure to China, of which it's a very big customer of German industry, and also it's wants to tap into Vietnam's skilled labour force. That was an aspect I thought was fantastically interesting. Tell us a bit about that, and what the attractions to a major economic power like Germany are, Vietnam, on that side of things.
Yes, Germany and Vietnam have long trade and long experience. Actually, our office in Ho Chi Minh City is in Deutsche House. It's has a German consulate in there, so we often welcome the visiting German dignitaries, and we have a number of German investors in Vietnam holding as well, which we're very proud of. Obviously, Germany over many years, a country blessed with great geography, great rivers, and it's built its engineering stock. And Vietnam has great depth of capability in engineering. Science, technology, engineering, maths is a big push within Vietnam. It has more STEM graduates, science, technology, engineering, math graduates than than many other countries in terms of a population of its percentage of its graduates. And so I think for German manufacturers and German investors, they're looking at opportunities in industrial parks in Vietnam where they can manufacture components. As you say, they can diversify their supply chain. For the last 5 years, there's been this China plus one push, people trying to de-risk their supply chain. Perhaps the US is pushing it a little bit far, which is saying, let's bring everything back onshore, which frankly is impossible after 70 years of globalization. But Vietnam is trying to carve a niche as a friendly shore for manufacturing. And so we've had Asian investors do this, but now German and other European investors. But I think, seeing the German delegation come through, strong commitment. I think it's obviously a big, powerful part of the EU. And over recent years, trade between Vietnam and the EU has been on the up and up. And they had an EU free trade agreement a few years ago now. And it's also knowledge sharing about, Germany has a very strong renewable energy footprint, right? It's been a big player in solar and wind for many, many years. And as Vietnam transitions its economy, there's things that Vietnam can learn from Germany, as well as German companies trying to find manufacturing and investment opportunities in the country. So it's a two-way street.
I think renewable energy was mentioned specifically in the piece I read on Reuters about this trip, and as were tunneling machines, which I guess plays into the infrastructure development story that you mentioned.
It does. Vietnam is a long, narrow country. It has beautiful coastline. It has mountains as well, and so for some of the new roads, they do go through tunnels. I guess the Swiss can build tunnels, and the Austrians can build tunnels, and the Germans too. And again, the renewable energy push is very important. Vietnam has committed to net zero by 2050. And although that probably means more coal in the midterm and more oil and natural gas, it's a transition away to more wind and more solar. And Germany has a lot of experience. And maybe even in the future, something which Germany has abandoned, which is potentially nuclear in Vietnam too.
It's interesting. The story is so positive, and yet, as you mentioned earlier, Vietnamese equities remain cheap. Why do you think there is that disparity, especially as I think you referred to in your monthly update that 2024 is a year set for some impressive corporate earnings growth? Perhaps talk us through the prospects for earnings growth, and why, despite that, equities in Vietnam remain cheap.
Well, I think the reason they're partly cheap is it's very much a domestic equity market. So more than 80% of the daily trade on the Vietnam stock markets is domestic retail investors. There's 7.7 million of them, which is probably the same number as there are in the UK. It's a significant number. It's a significant percentage of the population, 7.5%. I think that's the European average for people that have stock trading accounts. So the foreign flows are actually quite small. They only account for maybe 6-7% on a regular basis. And Vietnam, don't forget, despite all the wonderful strengths and opportunities it has, it's still classed as a frontier market, not yet a full emerging market. So the stories and the news flow really falls on the domestic ears. And there's been a few last year. There were some issues in the real estate segment, a couple of corruption cases that rattled the market globally. Local investors were worried about what's happening in trade and the US and potential recessions globally. So that flows through to the local market. So not every sector did as well as the economy as a whole, and moods and domestic sentiment comes into play as well to a certain extent. So the market is kind of underrated. It's cheap, and it's got good growth because the actual companies themselves are seeing 20 to 25% earnings growth forecast for this year. So as foreigners start to re-emerge into the market, and as domestic investors become a little bit more confident globally, we will perhaps see some more flow and re-rating. Actually, I think towards the end of last year, liquidity surged again. I think domestic confidence did start to pick up, and we saw daily liquidity on the stock markets kind of double from where it was at the beginning of the year.
Yeah, you mentioned a couple of things.
These flows, yeah.
You mentioned a couple of things there that are of massive interest. One is that shift from frontier to emerging market status. Perhaps we'll finish with that. But before that, you mentioned that not every sector did as well as the economy as a whole.
Yeah.
And I guess this is where your sort of stock picking expertise comes in, and why you beat the benchmark. You talk us through sort of that in a bit more granular detail.
Yeah, it's a stock pickers market in that sense, and so we're very nimble and active around our names and opportunities. So residential real estate didn't do very well last year. We've been underweight. We've chosen to play more in the industrial real estate, so the industrial parks, and that's much more resilient, and that's seen strong growth. So the residential sector wasn't so strong. Retail wasn't as strong as it's been in previous years. So some of our names suffered a little bit in that, but our business-to-business services had great growth last year, and our number one position, FPT, which is a digital champion, both in Vietnam and then as an export provider of software solutions globally, it keeps printing 20 to 30% compound growth in its top line and its bottom line. So, through our sector and our stock allocation, that's what led to our outperformance last year. So Gemadep, our logistics company, did super well. One of our industrial park names, Ideco, did really, really well as well. And a couple of our new names. We have a new retail name, FRT, which has 1,500 pharmacy chains in Vietnam. So in the UK, Boots, the chemist, I think has 2,200. So it's not quite at that level, but it's got 1,500 and it's growing rapidly. And it's a good retailer. And so we like that. And that stock price did well for us in 2023. Some of our banks also did well, but the banking sector can also, it's still cheap. We're somewhat underweight, the banking sector. So it's a question of, we're a closed-end fund. We've got a finite amount of capital. We run a concentrated portfolio, about 25 to 28 names, businesses that we know really well. And some of them, even ones we like, we have to kind of reduce a little bit because we think our conviction is more towards some of the other winners in the portfolio. So we're a very active manager around our portfolio. And we want to also be able to react to changes in the market, changes in circumstances as well.
Yeah, absolutely. And just on the, the subject of, Vietnam's status as a frontier market, and obviously, the government is taking steps to advance the stock market to achieve that emerging market status that will attract further flows. What's the what sort of time frame on that? I know it's a difficult question to answer, but how is the progress on that front?
Well, the point you make is an important one, so that the authorities and the government want to see this happen. They want to see, Vietnam be a modern industrialized country, and they want its capital markets to develop and continue to grow and develop. So they're very supportive. Vietnam is still a frontier market per MSCI, and it's still a frontier market per FTSE Russell. But FTSE Russell actually has put Vietnam on the watch list for upgrade to secondary emerging market. They did that a few years ago. And there's a chance in 2024 that Vietnam meets the criteria to then be put, for that to be confirmed, that Vietnam would go to an secondary emerging market under FTSE Russell. They make their decisions typically in March and signal those and publish those in September. So that's the earliest this year that Vietnam could see potentially a move towards the secondary emerging market for FTSE Russell. So that puts it in the same league as countries such as Indonesia and the Philippines. Vietnam stock market is much bigger and more active than the Philippines, but the Philippines is an emerging market. For MSCI, it's a slightly longer process. They do a review every June. There's 18 criteria that they check, and Vietnam doesn't pass muster on all of those yet. So there's still some way to go. What could be the catalyst, though, John, is the implementation of a new stock exchange system. It's a bit delayed. We're expecting it to be done by Christmas last year. It's likely maybe by the summer this year. But that will help improve the infrastructure. And it may solve some of the technical issues that have prevented Vietnam going on to that secondary emerging market status for FTSE Russell. So we wait and see. We're optimistic. And we're doing a little bit more analysis around this, and we'll share our conclusions perhaps in a few weeks' time. But we're hopeful that there's a chance for Vietnam to see the desire of the government delivered in more people recognizing it as a place that they want to invest their money. For foreigners, domestic investors clearly are very active participants, but those new foreign flows that we think will be attracted through an upgrade could be really important to see re-ratings and further growth in the Vietnamese stock market.
Yeah, absolutely. Well, I definitely look forward to hearing your thoughts on that in due course. But in the meantime, it certainly sounds like everything is heading in the right direction. Craig, it's been an absolute pleasure talking to you, as always.
Always, John. Thank you so much indeed.
Thank you.